Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional.
Great to be back.
So today we're digging into Mobileye's recent Q1 2025 earnings call. They're, a major force in driver assistance tech and pushing towards autonomous driving.
Absolutely. And our goal here is really to pull out the main takeaways, see what this tells us about where the whole auto industry might be heading.
Right. And the context is interesting, isn't it? They had a strong Q1, lots of design wins, big robotaxi news.
All while navigating, well, global economic uncertainty and these new trade frictions everyone's talking about. It's quite a mix.
Okay, so let's jump right in. How did Mobileye actually do in the first quarter of 2025?
Well, the big headline number was revenue up 83% compared to Q1 last year.
Wow, 83%. That sounds huge.
It is, but we need a bit of context. Q1 last year was unusually low for them. There were some inventory adjustments happening across the whole auto supply chain.
Okay, so it's a rebound, but from a low base. Still, impressive.
Definitely. It shows they bounced back strongly, market position looks solid, and their operating margins also saw a really sharp recovery.
Margins meaning basically how profitable their core business is.
Exactly. So a good recovery there suggests they're managing costs well as things scale up again, and they expect that operating expense growth, which was 14% in Q1, to slow down quite a bit for the rest of the year.
To mid-single digits, I think they said.
Yeah, something like that, which implies they feel pretty comfortable with their current R&D spending levels to support the upcoming product launches.
And financially, they seem healthy? Cash flow looked okay.
Very much so. They reported $109 million in operating cash flow. That's solid cash generation from just running the business day to day.
Good, good. And what about their bread and butter, those single-chip camera systems you see everywhere?
Seems to be doing well. Stable supply and demand right now, and maybe more importantly, they're locking in future business with new design wins.
Those are key for future revenue, right?
Absolutely. They shipped 8.5 million units in Q1, and they're guiding for about 7% growth year over year in Q2, both for units and revenue.
So things have stabilized after maybe some ups and downs last year?
It looks that way. Q1 volumes were steady, Q2 orders looking okay, and they even mentioned some upward revisions coming from car makers in China.
Interesting. Now, you mentioned the wider economic picture, the headwinds, tariffs. How is that affecting them? Because there is more uncertainty about global car production now.
There definitely is, but Mobileye seems, well, somewhat insulated from the direct cost of tariffs.
How so?
Their supply chain is pretty straightforward. Crucially, it's their customer, the car manufacturers, who are actually importing the chips.
Gotcha. So Mobileye isn't footing the tariff bill directly.
Right, but they're definitely aware of the indirect risks. If overall global car production slows down, or if consumers pull back on buying new cars, that could eventually impact them.
Makes sense. Despite that, they seem confident about their full-year outlook.
They do. They reiterated their guidance. They base that confidence on, well, the good first-half performance, their own analysis of the tariff impact on their customers, and third-party forecasts, too, like from S&P Global.
What do those forecasts say?
Well, S&P Global, for instance, suggests maybe a 2% dip in global production for the rest of 2025. Mobileye's internal look is a bit more cautious, maybe a 3-7% potential volume hit from their top 10 customers due to tariffs.
So they're acknowledging it's a potential issue, but manageable within their forecast range for now.
Exactly. They're watching it closely, obviously. Tariff schedules could still change.
Okay, let's shift gears to those design wins. You said they had strong momentum there.
Very strong. Q1 was huge. They apparently booked about 85% of the total design wins they got in all of 2024 just in the first quarter.
Wow, okay. That's quite an acceleration. Any specific trends emerging?
Yeah, a couple interesting things. One seems to be a shift in the value proposition for more advanced driver assist in mainstream cars. Their RM technology, that's the crowdsourced mapping tech.
Right, road experience management.
Exactly. It's in Ford's Blue Cruise now, and they landed a big win with a major Korean OEM to use REM as well. That's significant.
And that ties into needing more cameras on cars.
Precisely. There's a big push towards multi-camera setups. It's driven partly by safety regulations getting stricter, but also by consumers wanting things like hands-free highway driving, even in non-luxury vehicles.
Like BYD's God's Eye system they announced. That points to the demand for highway assist.
For sure. And Mobileye seems well-positioned with their Surround ADS solution using the IQ6 high chip. They actually announced their first win for that specific system with Volkswagen in Q1.
And they emphasize doing it all on one chip, right?
Yeah,
perception mapping policy.
Yeah, the whole stack on a single sauce, single ECU, and it's updatable over the air. That's a big selling point for car makers looking to simplify their electronics and move towards, software-defined vehicles. It's a platform play.
Any other notable wins?
Well, they mentioned getting their first new design win in about 8 years with a specific European OEM for their core 80s. That's interesting.
8 years is a long time.
It is. And also, their imaging radar is getting traction. They expect a design win soon, also with a European car maker, but outside their full drive system. This OEM wants to use it for high-speed Level 3 highway driving.
Level 3 being eyes-off driving.
Under certain conditions, yes.
Yeah.
So that radar win is a good sign for their chauffeur system, their Level 3 product.
Okay, but decisions on the really advanced stuff, supervision and chauffeur, are taking a bit longer.
Apparently so. The decision cycles are slower than they hoped, but they say progress is still being made. They've even added 2 new top 10 global OEMs to their prospect list recently.
And the Porsche and Audi programs are still on track.
Yep, still on track. They're aiming for prototype demos in the second half of this year. Those will be the first public showings of the IQ6 High systems in, actual production intent cars.
Okay, that brings us to the robotaxis. This seems like where some of the biggest news dropped. Mobileye Drive.
Definitely. 2 major announcements. First, the Lyft partnership. Initial operations planned for Dallas.
How does that work? Who owns the cars? Who runs the service?
So Marubeni, a Japanese conglomerate, will own and operate the vehicles. Lyft provides the platform for customers to hail a ride. The actual vehicle maker is still to be announced.
Okay, interesting model. And the second big one.
Even bigger, arguably, Volkswagen and Uber. They're teaming up to put Mobileye Drive-enabled VW ID Buzz vans onto the Uber network in LA starting in 2026.
ID Buzz robotaxis in LA via Uber. Wow.
Yeah. And here, VW's own mobility service, MOIA, will manage the fleet while Uber handles the customer side.
It sounds like this ecosystem approach is key. Mobileye provides the brain, partners handle operations and customers.
Exactly. It's designed to be capital light for Mobileye. They focus on the tech, cost-effective sensors, efficient compute, scalable AI, and partners leverage their strengths.
Any other robotaxi movement?
Yes, another partner, Aethon, got an order from Jacksonville Transit Authority for autonomous shuttles using Mobileye Drive.
And the business model here, how does Mobileye make money?
It's 2 parts. An upfront payment for the whole self-driving kit, ECU, hardware, software, radar, and then a recurring license fee based on how much the fleet is actually used.
So usage-based revenue on top of the hardware sale.
Precisely. And they're seeing strong interest, working on European launches concurrently with the US, especially leveraging that VW partnership. They're also talking to other OEMs interested in building Level 4 cars with their system.
The goal is scale, right? Getting beyond small pilots.
Absolutely. They talk about moving from hundreds of vehicles to potentially hundreds of thousands. The tech development using IQ6 High for those 2026 launches is reportedly on track.
When do they expect real revenue from this?
Meaningful revenue starting around 2027, they think, with potential for significant growth after that.
And the upfront cost? Any idea?
They described it as 5 figures plus, with healthy margins expected. And importantly, they stressed that the performance targets aim for superhuman driving capability, and they've addressed the liability questions.
Crucial points. Okay, looking further ahead, what's next in their tech pipeline?
They mentioned developing SuprEM, or Supreme REM. It's the next generation of their mapping tech using actual picture data from cameras to build even richer, more detailed maps.
Enhancing localization and scene understanding, I guess.
Exactly. And they also hinted at exploring opportunities in physical AI beyond just cars, though that was a bit vague.
Interesting. But for cars, the strategy seems layered.
Yeah. Surround ADAS becomes the new baseline, driven by safety rules. Then supervision is the step up, offering hands-free driving and gathering data for the next levels.
And Level 3, chauffeur, is the big prize for consumer cars.
That's how they see it. The Holy Grail, they sometimes call it, leading eventually to Level 4. And they are seeing more OEM interest in Level 3, targeting launches in the late 2027, early 2028 timeframe.
And AI and simulation are key to developing all this, especially for complex places like China.
Absolutely. They lean heavily on AI and simulation to train and validate the systems for diverse global conditions.
Okay, let's just quickly circle back to the financials for the outlook. Q1 beat their guidance slightly.
Yeah, mainly due to stronger China volumes and lower operating expenses than forecast.
And full-year expense growth still expected around 7%.
Adjusted operating expenses, yes, around 7% year-over-year growth is the expectation.
And just to reiterate on tariffs, no direct P&L hit expected in the U.S. because customers import.
Correct. And for chips going to Europe and Asia Pacific, most are for cars built and sold locally there, so less direct tariff impact for Mobileye again.
And margins are still expected to improve this year.
Yes, they still anticipate about a 100 basis point improvement in non-GAAP gross margin for the full year.
Okay, so wrapping this up, key takeaways seem to be strong Q1 rebound, really exciting robotaxi partnerships kicking off with Uber and Lyft.
Continued strong design win momentum across different levels of driver assist, from basic A days up through supervision.
And they seem to be navigating the tricky global economic situation pretty strategically so far.
That VW Uber deal really feels like a concrete step towards robotaxis becoming, a real scalable service people can actually use.
For sure. And the long game is clearly this evolution from advanced assistance systems today towards full autonomy down the road, with supervision and chauffeur as the key stepping stones.
Definitely the vision they're painting.
So here's a final thought for you listening. As this autonomous tech merges more and more with ride-sharing platforms like Uber and Lyft, what wire changes might we see? Think beyond just transport. What are the knock-on effects socially, economically? Could entirely new business models pop up? Something to chew on.
Good question. Lots to think about there.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.